Welcome back to the Wall Street Podcast. Today we're diving into a Morgan Stanley report from September 5th, 2025. It's titled UYA Inc. Back to Growth, Eyes on New Business. Our focus, really unpacking Huya's strategic shift and their move into broader game-related services.
Exactly. The report lays out how Huya's turned things around, revenue decline reversed, live streaming is stabilizing, and importantly, strong growth in their non-live streaming areas. This all feeds into a new outlook and, interestingly, a higher price target.
Okay, so let's break down that strategic turnaround. How did it happen? The report points to the first half of 2025. That's when they reversed the revenue decline. And the core live streaming business. It seems to have found its footing, stable, about 1% growth year over year and half over half.
Which is decent. Stabilization is key there. But the other revenue, the non-live streaming stuff, that surged. We're talking 42% year-over-year growth. Now it makes up 26% of their Q2 revenue this year. Just think, it was only 7% back in 2023. That's a big shift.
A very big shift. And it looks like it's impacting the bottom line too. Non-GAAP operating profit. Getting close to break even in Q2 25, that's quite an improvement from the losses back in 2022.
Right. And this ties into their broader strategy. Huya's always been known for, hardcore gamers, esports, but now they're aiming wider, becoming a full package game entertainment and services provider.
So not just watching streams, but more integrated services.
Precisely. Things like game item sales and their cooperation with Tencent is crucial there. Also game distribution, both PC and mobile for Tencent and others. And they're even pushing similar models overseas. Morgan Stanley actually forecasts 42% growth in this game-related revenue for 2025 overall. It shows real conviction in this pivot.
Okay, let's talk outlook and valuation then. Morgan Stanley bumps the price target to US $3.80. That's up from $3.60. They've also lifted revenue forecasts for 25 and 26 by 5% and 10%. Seems positive, but here's the interesting part. The non-GAAP net profit forecasts, they're actually down significantly. 72% for 25, 42% for 26. Why?
Well, two main reasons cited are lower margins expected from these newer expanding businesses, and also less interest income, likely due to paying out substantial dividends recently. The valuation itself is sum of the parts. They're using an 8x PE multiple on estimated 2026 core earnings. Plus, they factor in a huge chunk of net cash, US $527 million. That's, what, 60% of the company's market cap right now?
So if we boil it down, what are the absolute core catalysts driving this turnaround, beyond just the numbers themselves?
I'd say it's really that two-pronged approach. First, stabilizing the core, the live streaming, getting that baseline solid. And second, that really aggressive 42% growth in the new game-related areas. Getting near non-GAAP operating break-even isn't just a financial tick box. It shows they're actually executing this difficult strategic shift effectively.
The report keeps mentioning Tencent. How vital is that relationship for Huya's new game businesses? Is there a risk of dependency there?
Oh, it's absolutely critical. Tencent isn't just any shareholder. They're the largest. That relationship opens doors, especially for selling game items within Tencent's ecosystem and for distributing games more widely. Huya gets to leverage its user base, its gaming cred. While there's always a dynamic with a major partner, the report seems to frame it more as strategic alignment, strengthening Huya by tapping into Tencent's massive game portfolio. Less dependency, more synergy, perhaps.
Okay, so we have a raised price target but lowered profit forecasts. How should investors interpret that signal? How do you square that circle?
It suggests Morgan Stanley sees the long game here. They're likely valuing the strategic pivot and the potential for future revenue growth more heavily than near-term profit margins. It's a bet on Huya successfully building out these comprehensive game services. The lower profit forecasts acknowledge the cost of that growth, the investment needed, maybe competition too. But the higher PT signals confidence it'll pay off eventually. Still, execution risk is real. You see that in their bull and bear cases, US $5.60 versus US $2.80. There's a wide range of outcomes.
And bringing it back to the everyday person, what does Huya's shift mean for gamers or just, people consuming digital content?
Well, it points towards a more integrated experience. Think easier ways to buy things within games you're watching or playing. Maybe discovering new games becomes simpler through these platforms. They're moving from just being streaming sites to more like complete digital hubs for gaming. It subtly changes how you interact and spend time online.
That's a great point. It blurs the lines. So as we wrap up, maybe the thought to leave you with is how this evolution in platforms like Huya might continue to reshape not just investment opportunities, but fundamentally how we all engage with digital entertainment in the future. It's a constantly shifting landscape.